So a lot of people approach trading like it's a game of prediction, right? They're always hunting for the next hot tip. Well, we're here to completely reframe that idea. In this explainer, we're going to treat trading not as some shortcut to getting rich, but as a structured professional skill. The whole goal is to build a foundation of strict, repeatable rules that lead to clear, low-stress decisions.
This right here, this is our core philosophy. See, professional trading isn't about being in the market all the time. It's about executing your plan flawlessly based on a process you've already defined. So when the conditions aren't perfect, the only correct decision is to do nothing. This one idea is going to guide everything else we talk about.
All right, here's our roadmap. First, we'll redefine what the goal of trading even is. Then, we'll get into the non-negotiable laws of the market, simplify our toolkit down to the bare essentials, and then walk through a 4-gate system of elimination. We'll wrap things up by talking about some crucial mindset shifts around risk and what professional success actually looks like. Let's dive in.
Okay, first things first, let's be absolutely clear on why we're here. The goal is not to trade a lot. The goal is to make high-quality, rule-based decisions with a very low time commitment and almost no stress. This means your main job isn't to find trades, your main job is to be a filter, to reject all the subpar opportunities out there. Now, we're moving on to the foundation of every single trading decision. Look, market structure isn't a theory, it's not an opinion, it is the fundamental law of how prices move. It's the first and the most important piece of information on any chart. Our analysis has to start with it, and it has to end with it.
And for what we need, market structure is incredibly simple. As you can see, an uptrend is just a series of higher highs and higher lows, and a downtrend, a series of lower highs and lower lows. That's it. We don't need things to be complicated. We need them to be crystal clear. This is exactly what we're looking for.
And here it is. This is your first and most powerful rule. If you look at a chart and the structure, that pattern of highs and lows, isn't immediately and obviously clear, you close the chart. Seriously, there's no analysis to do. There is no trade.
Next up, we get rid of all the noise by radically simplifying our tools. You know, a really common mistake is believing that more indicators or more complex tools lead to better decisions. The opposite is true. A disciplined trader uses a minimalist toolkit because it forces objectivity and removes all that subjective guesswork.
Our system uses exactly 2 time frames. The weekly chart, that gives us our long-term context, and the daily chart, that's where we look for an entry. And the rule here is absolute. The trend structure on both of these time frames must align. If the weekly is in an uptrend but the daily is chopping sideways, the trade is invalid, no exceptions.
This slide shows a key rule for staying objective. Support and resistance. They're zones, not razor-thin lines. A valid zone has to be obvious on a high time frame. It needs to show clear price reactions in the past, and it has to be a distinct area. If you have to squint or guess where it is, it's invalid. It just doesn't count.
Finally, we permit only one indicator, the 20-period exponential moving average, and its role is strictly limited. We only use it for context, to help us visualize if the price is near a level of value inside a trend. It does not generate buy or sell signals, it does not invalidate a trade. Think of it as a guide, not a trigger.
So let's see how all these rules build into a real-world framework. The 4-gate system is our process of elimination. Every single potential trade has to pass through these 4 gates, one by one. And if it fails at any single gate, it's rejected immediately. The whole point of this system is to say no.
Here are the 4 gates. Gate 1 is the market structure correct on both time frames. If not, reject. Gate 2 is the trend clean and high quality, without a bunch of messy, overlapping price action. If not, reject. Gate 3 is the price pulling back to a valid support zone. If not, reject. Only if it passes all 3 do we even get to Gate 4. Can the trade be defined with an acceptable amount of risk? Most opportunities should fail at Gate 1 or 2.
This brings us to probably the biggest mental shift any developing trader has to make. You see, amateurs think about how much they can make. Professionals, they start by defining exactly how they could be wrong and how much they stand to lose. Your analysis has to begin with risk, not with profit.
Before you even think about entering a trade, you have to ask this question. At what exact price point on this chart is my entire idea proven wrong? That right there defines your stop loss. It's not an afterthought. It is the starting point of your entire trade plan.
So this is the mandatory thought process. First, you identify your structural invalidation point. That's your stop loss. Second, you calculate what that means in actual dollars. And third, you evaluate if the potential reward is at least double that risk. If you cannot clearly define your stop loss based on the market structure, then no trade exists, period.
Okay, so by following this whole process, we get to the final and maybe the most difficult mindset shift. In a rule-based system, success isn't measured by how much action you take or how much profit you make. It's measured by your discipline. A good day is very often a day where you analyze the market and correctly decide to take no action at all.
Your new metrics for success are totally counterintuitive. Success is rejecting chart after chart. It's feeling bored because the process should be mechanical, not exciting. It's following every single rule without arguing with yourself. And most importantly, it's being perfectly comfortable with doing nothing, knowing that no trade is a valid and often very profitable decision.
And this brings us to our final thought, which really just wraps this whole framework up. Trading is a process of elimination. The goal is to say no. Your discipline and following the rules is so much more important than any single strategy. In this system, every chart you correctly reject is a step forward. Rejection isn't failure, it's progress.